But Lata is back with us in the studio here, and we have another guest who joins us now. Rashesh Shah, Chairman and CEO at Edelweiss Financial Services, joins in. Rashesh, hi, good morning. It's good tidings. It's good tidings for our markets. Happy Diwali to you and your entire team, first up.
Happy Diwali to you and all the viewers at CNBC.
Thank you so much. Lata was just in conversation with Madhu Kela, and he believes that he won't be surprised to see a 20% earnings growth over the next 3 years, purely because of the momentum in the market and the reforms that have come through by the new government. What's the sense you're getting?
Yeah, I think if you see the economic conditions in India, especially all the macroeconomic parameters, including inflation, because inflation has been the one issue that has been dogging India for the last few years, and hopefully that is also coming under control. So with the new government, with the political stability, economic growth hopefully coming back on track, improvement in macro, the rupee has been stable, inflation under control. So I think things augur well for India, and I think getting to see a 15 to 20% growth, if the GDP is able to grow between 6 to 6.5% for the next 3 years, we also believe that a corporate earnings growth of 18 to 20% is easily possible.
Okay, that's very big coming from market masters like you, Rashesh. But when do you see the economy turning or corporate earnings turning? We spoke to Rajiv Bajaj, as I was just saying, a week back after his numbers. He said Diwali sales were very tepid, and the IIP numbers are proving it. What's the sense as to which is that quarter where this cobwebs will be brushed away and we will see growth?
I think all of us are now hypothesizing that it will be FY16 onwards, because FY15 is half over, and as you correctly said, we are still not seeing real improvement on the ground. Though when we talk to corporates, there is a sense of optimism. People are starting to see some improvement in the business sentiment. Unfortunately, there is always a long cycle on all this. So the moving average, upturns only very slowly. So we are hoping from the fourth quarter. In fact, the key quarter to watch will be the fourth quarter, the Jan-Feb-March quarter for this year. And if we don't see improvement in IIP, improvement in consumer sales in that quarter, then there will be some clear concerns on that. But the current expectations are that from that quarter onwards, and the real growth will be FY16, and everybody have got their eyes on that now.
So somewhere 2072 should be the turning point, you think?
Yes, and as usual, equity markets anticipates all this by a few quarters. So 2 to 3 quarters up, when the equity markets go up, usually the hypothesis underlying is that there is economic improvement, corporate earnings growth rate coming 3 quarters down the line. If it has not come, and I think as I said, Jan-Feb-March quarter is the one all of us are watching very closely. When we talk to corporates, we really focus on what they expect in that quarter, and that will set the course for the economy for the next couple of years, I would guess.
All right, let's talk about your own earnings then, Rashesh. It's been a very good quarter for Edelweiss. I mean, income has gone up close to 60%. Profits have gone up about 70%. Which is the segment that has performed the best? And what kind of trajectory are you expecting to see in the second half of the fiscal?
Yeah, I think things have been improving. But I must also admit that, the second quarter of the last year was also unusually bad, because as you remember, the global currency crisis because of the Fed tapering issue had really dampened Q2 of the last year. So when you look at for all of us, for I think a lot of the financial services firms, Q2 last year versus Q2 this year will look good. But along with that, there is clear improvement. Our credit business continue to grow at about 28 to 30% on a YOY basis. So that is a steady growth. We are not seeing much hyper growth on that, nor any slowdown. And as you know, capital markets and asset management last 5-6 months have been very good, and we've been consolidating on that. So whether it's investment banking, whether it's brokerage revenues, the last 2 quarters have been very good for that, and it is also showing in the earnings. So I think it's been capital markets, it's been credit, and our third business, commodities, has also done well, as we are diversified from the precious metals into agri commodities, and we're seeing a lot of upside in financial intermediation in agri commodities now.
I'll come back to what you expect in the third quarter from all these sectors, broking in particular, since investor appetite seems to have been whetted. But my appetite is more for the market questions itself. Rashesh, what's your sense about this year itself? We saw very dramatic reforms yesterday, and then we saw the government's hand being strengthened by the voice of the people as well. Are we going to? Is this combination enough to give market new highs this quarter itself, 2014 itself?
I think, as you said, the India factors are very positive. I think everything, including the election results, including the step-by-step, improvement by the government in various reform, initiatives, huge positive. I think what is keeping a cap on the market are the global issues. So our feeling is that the Indian issues will keep the markets fairly buoyant, while the global issues will keep a kind of a cap on the market. If you see the good news is Indian liquidity is very good. Global liquidity is also still fairly good in spite of the recent issues in the global markets. But the global sentiment is very weak, and we are starting to see, when we talk to global investors, there is a feeling that this quarter, the October, November, December quarter, there will be a lot of volatility in the markets, and every time there is any volatility in the market, most of the investors play safe, and emerging markets may not be the place for them to aggressively go in. So I think a large part of, as you asked, whether the markets will hit new highs will be determined not by the Indian factors but by the global factors, and currently global factors are giving a little bit of cause for concern. Though I think for India, as we speak to a lot of investors, they still have a lot of appetite for Indian investments. So they are hoping that Indian markets correct a little bit, which will give them an opportunity to get into the market.
Okay, well, the biggest nifty gainer today is BPCL, obviously because of the gas price hike, and this is a stock that has doubled this year already. How much of the news flow is already in the price, you think, or do you expect this to be a stock that could perhaps see a re-rating and see higher levels over the next couple of years?
See, I think broadly, as you talk to investors, the oil marketing companies, especially the government-owned oil and gas firms, have been underperforming for the last almost 7 to 8 years, for the simple reason that they were in a way used to cross-subsidize some of the social programs, some of the other requirements of the government. Now the feeling that investors have got in the last 5-6 months because of the new government, that hopefully that will end, and this government-owned companies will also be reasonably independent and free, and coupled with a falling oil price globally, there could be good times for this government-owned oil and gas companies. So I think we have been seeing that for the last 5-6 months, and everything government has done has only reinforced that hypothesis. So I think what we are seeing is a reflection of that.
How would you distribute, say, 100 rupees among various sectors now, Rashesh? If you're making an investment for the next 1 year, would there be a substantial amount of cyclicals at all?
I think cyclicals will have a place. Have a place in the portfolio. We're still very bullish on the export-oriented sectors. So IT and pharma still, I think, for a lot of investors, will remain approximately half the portfolio, and it should be so because the US economy is doing well, and quite a few IT and pharma companies are still largely correlated with the US markets. So on that basis, I think export-oriented sectors will continue to find a place in the portfolio. People are not yet going underweight those. And along with that, I think cyclicals, especially the good companies which have not broken balance sheets. We are still not seeing investors going into companies where there are huge amount of borrowing, where the balance sheets are slightly broken. But I think other cyclicals, people are coming back. Manufacturing is starting to come back, and we are seeing a lot of interest in the private sector, financial services, especially banks. So private banks and manufacturing companies are also starting to come back in the investor portfolio.
Actually, that was my next question, and perhaps that's my final question to you, Rashesh. Private banks have done quite well this earnings season so far, if it's names like IndusInd Bank or whether it's names like Axis. Do you expect that good quality earnings to trickle into some of the PSU banking names as well?
On and off, but I think the concerns about PSU banks on both counts, on the quality of assets, the cleanup on that, as well as on the recapitalization. So unless there are steps taken by the government on recapitalization of the PSU banks, as well as we see significant improvement in the asset quality, investors will remain concerned. Though I must also admit that we all know that it's all in the price, so there is not any additional bad news, but the current issues which are there, unless they are addressed, I don't think investors will aggressively invest into these stocks. While on the other hand, the private sector banks are very well placed. Their asset quality is still under control. They have been able to maintain good asset quality, as well as the opportunity for them to raise capital, as we have seen a few banks do. And I think in the coming about a year or so, we'll see a lot more private banks raise capital to help them grow at maybe 20-25% a year, and that will be something investors will be very optimistic about.
Because of market conditions, do you repeat the 60% jump in Q3 as well? What's the full year for Edelweiss?
See, you see on a QOQ basis, I think they'll be up and down, because when you look at last quarter, the second quarter of the last year, as I said earlier, that was unduly subdued. So our approach in Edelweiss is we want to grow between 25 to 30% a year. We have been growing that in the last 3 years in spite of the bad economic situation in India. We've been able to maintain a 30% growth for the last 3 years, and I think our approach is to maintain a 25 to 30% growth as well as get our return on equity up. So now our ex-insurance ROE has gone above 15%, and our ideal is to be between 16 to 17% on that. So as long as we achieve this 25 to 30% growth and an ROE of 16-17% ex-insurance range, I think it will be as per our plan.
All right, we'll leave it at that, Rashesh. It was a pleasure speaking with you. Thank you very much for joining us as we greet our investors with big market masters ahead of summer 2071. We'll have to take a break on that note. Another big cue for the market today has been, of course, the BJP returning to power or coming to power in both Maharashtra and Haryana.